Good evening and welcome to Weekly Web3. I'm Supermodel Gamer. Tonight we focus on a pivotal report from BlackRock, one of the world's largest asset managers. With over $9 trillion in assets under management, BlackRock's decisions and insights resonate across global markets, influencing both individual and institutional investors. BlackRock's influence extends beyond sheer size, though. As a leading investment firm, it shapes trends and provides strategic insight into the financial world. This makes their research and perspectives particularly impactful. Let's start with the U.S. 10-year yields, which have surged to around 5%, the highest in 16 years, signaling a significant shift in the economic climate. In the post-pandemic era, the U.S. economy's growth has been less than 1.8% annually on average, below pre-pandemic levels. Despite this slower growth, the U.S. job market has seen a remarkable recovery, with nearly 7 million new jobs created since January 2022. However, this only compensates for the 22 million jobs lost during the pandemic. Interestingly, current U.S. unemployment rates are historically low, even though the growth rate is below pre-pandemic levels. In the bond market, short-term treasuries have been outperforming their long-term counterparts since mid-July 2023. Analysts are finding it challenging to predict earnings, with S&P 500 equity earnings estimates more dispersed now than before the pandemic. There's also a notable rise in term premium, reflecting increased yield volatility and long-term bond holding risks. 2023 has been a standout year for the U.S. tech sector, outperforming the broader market significantly. A key driver of this trend is the advancement in AI technology, which reached a critical inflection point in late 2022. Another emerging investment theme is climate resiliency. The demand for products and services that build climate resilience is growing rapidly. Global geopolitical fragmentation is on the rise. The BlackRock Geopolitical Risk Indicator suggests that markets are more attentive to these risks than ever before. Moving to specific markets, Japan's equities showed impressive performance in 2023, with upgrades due to appealing valuations and earnings growth. Emerging markets are being preferred over developed markets, with India's digital payment system and Latin America's low-carbon transition opportunities standing out. In real estate, we observe a difference in capitalization rates between U.S. core real estate funds and publicly traded REITs. Shifting to asset allocation, there's a move from broad strategies to more selective and granular approaches. In the equity and bonds markets, we see potential alpha opportunities in both developed and emerging markets, especially in sectors like technology and financials. Tactically, the approach involves underweighting in developed market equities and overweighting in short-term bonds. Strategically, the focus is on private credit, inflation-linked bonds, and short to medium-term bonds. That's all for today's financial update. The 2024 Global Outlook report by BlackRock provides invaluable insights for investors.